Charlie Munger, vice chairman of Berkshire Hathaway and the closest partner also known as the right-hand man of Warren Buffett, is a profoundly wise man who is absolutely worth listening to, especially in the topic about investing, psychology of wealthy people, rationality, and life experience. We are all in a big bubble now. Let's find out through this interview from Mr. Charlie Munger how the economic crisis can affect this new generation on how they can build their wealth. He was asked how this is likely to play out when we print money on the scale of what modern nations are printing it, like the countries of Japan, United States, and Europe for example. We are getting into new territory now in terms of size, and there's never anything quite like what we're doing now, and we do know from what's happened in other nations that if you try and print too much money, it eventually causes terrible trouble, and we are a bit closer to that than we've been before, but it may still be a long way off. We certainly hope when Volcker after the 70s took the primary to 20% and the government was paying 15% on these government bonds, that a horrible recession lasting a long time would be caught with a lot of agony. He said that he would not predict that our modern politicians will be as willing to permit a new Volcker to get that though with the economy and bring on that kind of recession, so I think the new troubles are likely to be different from the old troubles. You may wish you had a Volcker-style recession instead of what you're going to get. The troubles that come to us could be worse than what Volcker was dealing with and harder to fix. Think of all Latin American countries that print too much money. They get strong men, and so that's what Plato said happened in the early Greek city-state democracies. One person, one vote. A lot of equality and you get the demographic slater of the population. Pretty soon you don't have your democracy anymore. He didn't think that was a crazy idea on Plato's part. He said, think that you have a bunch of interest-bearing debts and you pay them off with checking accounts which you're no longer paying interest on. He's always just looking for something that's good enough to put money in, and he figures out that he wants to swim as well as he can against the tides. He is not trying to predict the tides. He even added that if you're going to invest in stocks for the long term or real estate, there are going to be periods when there's a lot of agony. In other periods when there's a boom, and he thinks people just have to learn to live through them. As Kipling once said, treat those two imposters just the same. You have to deal with daylight and night. He was asked, what impact has passive investing had on stock valuations? He said, it has huge impact. That there are a new bunch of emperors and they're the people who vote the shares and the index funds. Mr. Munger said that we have a hugely strong economy and a hugely strong technical civilization, and that's not going away, as well as the knowledge and so forth. We can believe what a modern factory looks like when you feel it with robots, and that's coming more and more, and it's coming to China too, for that matter. And so these trends are inevitable, and he would think that it does create adjustment problems. If you ever find a unionized job and they replace you with a robot, you've got a difficult problem. The interviewer asked, if taxes were not an issue, what are your thoughts on going to cash today and waiting for better opportunities to deploy that cash over the next 12 months? Is it a sensible idea in your mind? He answered, in my whole adult life, I've never hoarded cash waiting for better conditions. I've just invested in the best thing I could find, and I don't think I'm going to change now. The Daily Journal's used up its cash now. Berkshire has quite a bit of excess cash, but it's not doing that because he thinks that it knows how to do time investments. He added, you just can't find anything he can't stand buying, so we don't have a solution to your problem. We're just coping with it. As I've described, the interviewer asked again, given the valuation and market correction in early 2020, why is Berkshire not picking up or adding any new companies to its profile? Kudos to the team for picking up Apple shares a couple of years back. That's paying off for sure. He said, the reason we're buying this, we can't buy anything, the prices we're willing to pay. It is just that some simple other people are bidding the price up, and a lot of the buying is not by people who really plan to own them. A lot of it is feed ribbon buying. Private equity buys things so they can have more fees by having more things under management. It is a lot easier to buy something when you use somebody else's money. We're using our own money. At least that's the way he had always believed, that nothing was worth an infinite price. His old torch professor said, Charlie, tell me what your problem is and I'll try to make it difficult for you. And he did him a favor by treating him that way. Inflation is a big part of it, so it's a huge danger once you've got a populace that learns it can vote itself money. If you overdo it that much, you ruin your civilization a lot, and it's a big long-range danger. If you look at the Roman Republic, even after they went to an empire with an absolute ruler, they inflated the currency steadily for hundreds of years, and eventually the whole damn Roman Empire collapsed. So it is the biggest long-term danger we have, probably apart from nuclear war. He thinks the safe consumption for an investor is that over the next 100 years, the EM currency is going to zero. That's his working hypothesis, a very dangerous environment. So the history is not pleasant, and Germany was a very advanced and civilized nation. The Germany that Hitler took over. He always said that the interesting thing about that was little Albert Einstein, the little Jewish boy, got his entire primary education with the insistence of a Catholic church in Germany. Now that is a very civilized nation, so if you could let your nation deteriorate too much, what you get as a Hitler, we've proved it. Life was pretty brutal and short and limited. No printing press, no air conditioning, no modern medicine. The next 100 years gave us widely distributed electricity, modern medicine, the automobile, the airplane, the records, the movies, air conditioning in the South, and he thinks what a blessing it was if you wanted 3 children you had to have 6 because 3 died in infancy. That was what our ancestors thought of the agony of watching half your children die. It is amazing how much achievement there's been in civilization in these last 200 years, and most of it in the last 100 years. Now the trouble with it is that the basic needs are pretty well filled. In the United States, the principal problem of the poor people is they're too fat. That is a very different place from what happened in the past. They were on the edge of starvation, and what happens is it's really interesting. It's with all of these enormous increase in living standards and freedom and diminishment or racial inequities and all the huge progress that has come. That is the reason that God came down and told Moses that he couldn't envy your neighbor's wife or even his donkey. Even the old Jews were having trouble with envy, and so it's building the nature of things. He can't even change the fact that a lot of people are very unhappy and feel very abused after everything's improved by about 600% because there's still somebody else who has more. Think of the pretentious expenditures of the rich. Who needs a Rolex watch so you can get mugged for it? He doesn't think there's much happiness in it, but it does drive the civilization we actually have. It drives dissatisfaction, he added. He was asked again, how will this all play out and what's the best advice you have for individual investors to optimally deal with the negative impact of inflation other than owning quality equities? He said, well, it may be that you have to choose the least bad of a bunch of options that frequently happens in human decision making. And the Mungers have Berkshire stock, Costco stock, Chinese stocks, a little bit of daily journal stock, and a bunch of apartment houses. It's okay, yes, he thinks the great lesson from the Mungers is you don't need all this diversification. It is going to be way harder for the group that is graduating from college now for them to get rich and stay rich and so forth. It'll be way harder for them than it was for his generation. Think what it costs to own a house in a desirable neighborhood in a city like Los Angeles. He thinks we'll probably end up with higher income taxes too, and so on. No, he thinks the investment world is plenty hard, and he don't think that in his lifetime 90 years, it was the ideal time to own a diversified portfolio. Common stocks that updated little by adding the new ones that came in like the apples and the alphabets and so forth, and he would say the people got maybe 10 or 11% if you did that very intelligently before inflation and maybe 9% after. He thinks it would be very wise to have more modest ambitions in terms of what they choose to deal with. So he thinks you have to figure out your level of skill or the level of skill your advisor has, and that should enter the equation. But to everyone who finds the current investment climate hard and difficult and somewhat confusing, he would say, welcome to adult life. I believe that to summarize what Mr. Munger is saying, that be content with what you have and strive in this life not to prove anything to people, but just to make sure you are meeting your needs and one day at a time. invest in a good measure in this life.